The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Day, Money Masters and Treasure Hunters. Welcome to the August 15th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, that's something we must master each and every day. So let's begin the day with some empowering beliefs. The first one brought to us by Napoleon Hill. For those of you that know him, you know he says whatever the mind of a man or woman can achieve and believe, it can achieve. That's what you need, folks. You've got to have a strong belief system. How about this one from Steve Jobs? He said, your time is limited, so don't waste it living someone else's life. How about this one from Robert Frost? He said, two roads, not me, not like two Steve Rhodeses or anything, but two roads that you traveled down diverged in a wood. And he said, I took the one less traveled, and that has made all the difference in the world. And lastly, this one here from Jeff Bezos. See if this sounds like he actually lives what it is that he says. I sure think he does. He says, the common question that gets asked in business is why? That's a good question, but an equally valid question is, why not? Well, let's go check out the why of the markets. Let's go check out what they're doing. Right now, you've got the Dow off 194 points, trading at 15,143, trading right into a potential area of support. And if it breaks this support, that will be a big horn going off in the marketplace. The S&P, that's down 22 points, trading at 1662 right now. NASDAQ off 58. So everything off over a full percentage point. NASDAQ here leading the charge down off 1 6/10%. NASDAQ 100 off slightly more. That's off 52 points, trading at 30.77. Russell 2000 down a percentage and a half off 15 at 10.31. You've got the New York Stock Exchange, that's down 130 points with wide price spread out there. Actually, only 218 advancing issues, so that means nearly 2,500 net declining issues. That is going to put a world to hurt. The Bears really have control. They're pushing the ball down the field. The volatility index, though, it's up 13% right now. Now, the key here, it's trading out at 1471. We're going to take a look at it. It's trading above the 50-day exponential moving average out there. Very dangerous thing. Now, since the lows in 2011, August 2011, when the VIX closes up by more than 10%, you see a bounce, a slight bounce. Sometimes it can be a decent bounce the following trading session. If not the following trading session, it happens on the very next one out there. So that, now, what that would do, what that would set up, we got a lot of time left in the trading session, that would give you an opportunity to get out or get on board a short trade if you're not in the short trade. But we'll take things one day at a time, one moment at a time. And our call number is 877-927-6648. We're going to start off by taking a look at the Dow. So if you're listening on the radio or your mobile device at TFNN.MOBI, thanks so much for doing that. Right now we've got the Dow getting ready to, if it's not already, trading into that high-volume downdraft bar that started on June 20th, the top of which is 15,105.51. Not there yet, but headed to it. We'll get there here shortly. It's at 15,123. You can see that's the black horizontal line going across my screen. If you are listening in on the radio or your mobile device, on your mobile device, you can catch the you can catch the live stream of the show by going to the homepage of TFNN.com. Over on the right-hand side, what you will see is a button with three little smartphones, devices, gadgets. Click on that. You can get this show streaming live. Of course, the archive is on Channel 10. We're also looking at a trend line, an important trend line, because this trend line has not been broken. This was a trend line established going back to the November 16th low. 12,471. That's your first touch point. Your next touch point is going to be that low from December 31st, when they were selling the fiscal cliff idea out there. So you're going to use that low, 12,883. The last time down here, which was to the trend line, I should say, which was on June 24th, that actually held. That held. You can see it touched that area, bounce back up, and then we saw the market move higher out here. Now, what the Dow is doing, it's trading right into both a diagonal, that's the trend line, as well as some horizontal potential support because it's high volume. But what we do know about the Dow, we'll go switch over to the diamonds here momentarily, is June 24th is also got the same kind of volume out there. So you got a high volume, untested low. That's where the Dow wants to head to. Will it take a little bit of rest here or not? I don't know, but we know that it's up against an important area of support, and that's important for us to be watching. Let's switch over and take a look at the diamonds. Let's go take a look at take a look at volume and so forth as we speak. If we take a look at the diamonds right now, trade out at 151.23. We'll see that it has broken that same trend line going back to that November 16th area. You'll always see a little bit of an adjustment here because of dividends and so forth. In this case here so far, gapping down this morning into that trend line. Volume behind the move here, and we have not seen volume in the marketplace, right? Certainly not to the upside. Well, guess what, folks? We're seeing it to the downside. Already nearly 3 million shares in only the first 42 minutes of trading. That's after making highs with 3.6 million shares on August the 2nd out there. So you make a high on August 2nd with 3.6. Today already in less than an hour of trading, you're down with 2.8. And you're going to be headed towards that June 24th level. That's got 14 million shares out there. You can see that June 20th level as well had 14 million shares. So you've got you got volume at the bottom. That's where the market is headed to. The top of the June 20th area on the diamonds is going to be 149.88 out there. Right now it's trading at 151.16. So volume to the downside. That June 24th area, it's been screaming that the Dow is going to head down there. That's where she is headed to. Let's go take a look at the SPY. Then we'll go over and take a look at the S&P 500. We'll also see the SPY here headed into that same trend line. Now, that trend line was broken, so you did see a close below that on June 24th. If we take a look at it, let's get rid of that butterfly pattern because it doesn't look like that is going to form anytime soon here. The SPY was making a high with 91 million shares on August the 2nd, gapping down this morning already 37 million shares, so it's got volume. Now, the June 20th area, 321 million shares, the top of which is 162.10, so that is most certainly where it's headed to. If we take a look at retracements, thus far, meaning coming off of the June 24th high all the way up to the August 2nd high out there, what you'll see is the dead cat bounce, 0.382, 165.15, and the normal move, which is the 0.618 area, is 161.55. So we'll get a lot of information as the SPYs get into that 160-ish, 161-ish level as we take a look at volume. But so far, you've got big volume coming out of the tires. Let's go switch over to the 10-minute charts out here. Let's go see if volume is steady as she goes. We'll take a look at that SPY chart here. On the 10-minute chart, you can see first volume spike at the open, 8.5 million shares out of the doors. Next volume bar was 5.4 million shares, then picking up 6 million shares, then picking up again in that last 10-minute session, coming into 10:10 with 7.98 million shares out here. Only been trading for 4 minutes into this session. We're already at 3.8 million. So volume is picking up. It is gaining steam. You got light volume up, big volume down. Bad news, big bad news to the downside out here. Let's go take a look at the actual SPY itself. Let's take a look at the index and see what it is doing, see what kind of trend line, if anything, that it is up against. That trend line here in the SPY, you can see it's below that level. That's, again, that November 16th area. So the SPY broke through that trend line, did it with volume. That was on June 20th. That's where the SPY is certainly headed to, the top of which is 1624 out there. But all the markets should come back and test that. Well, I won't say all. We'll have to take a look at the Russell 2000. I don't know if the Russell will actually get down or the NASDAQ Composite to get down in the June 24th level. But we'll take things one day at a time. If we take a look at retracements that we've seen thus far in the S&P 500, not yet to the 0.382 retracement, which is 1652, but 1617 really the mark out there as the 0.618 level. We'll have to see what the volume looks like as it continues its move down there. Now let's go take a look at what has been the strength inside the marketplace, that being, the Russell 2000 would be one. Let's go take a look at the Russell. The Russell's going to head to the May 22nd high. That may be where it runs out of steam. The Russell had completed a number of patterns. In fact, we'll go over to the futures chart here real quickly because that's a chart where I've got everything drawn so nicely out here as we put the weekly chart out here. This was the beauty of charts out here because it had all of the patterns. There we go. The patterns that I'm referring to, it had an A to B equals CD up. That completed at 1052 as the price point. It had a 1.618 butterfly sell pattern. Long-term, because this is a pattern that formed off of the May 6, 2011, 2 years ago. So it formed off of that high to the low that was put down in October of 2011. Then it formed a 3 drive to a top pattern, completed it. Perfect timing. I mean, perfect as you get. This is a textbook. If you were putting together a textbook on all 3 of these patterns, this one is ideal out here. And then we saw last week, we saw the trigger. We saw the bearish reversal candle. You saw a bearish engulfing form last week. Now you're getting follow through to the downside. So it's a significant set of reversal patterns that are inside there. If we go back and we take a look at the daily chart out here inside the Russell 2000, the daily chart says that where price ought to head to is going to be that May 22nd high. Let's go back to the actual index itself. Then we'll go take a look at the IWM and take a look at those numbers. So in the Russell 2000, the first area, because that it's got a test, is going to be that May 22nd high. That's at 10,008.23. It's now trading at 1030.29. But let's go take a look at the volume actually inside the IWM. We'll switch over to the ETF. Let's take a look first at the intraday charts. Let's look at the 10-minute charts. See what kind of volume it is that we've had here. I need to just refresh my screen. So we'll see if volume is just like inside the S&P 500, if it is picking up to the downside. So we're looking at a 10-minute chart if you're watching us on Tiger TV. And in the first 10 minutes, you had a big volume downdraft. That was with 3 million shares, 2.8 to be exact. The next candle had 1.8 after that, 1.5 after that, 1.6, 1.7. So it was picking up during that last 10-minute session. 2 minutes to go in this one. Volume cooling off just a bit. 1.2 million shares as we speak. That is in the IWM. Now, let's go take a look at the actual daily ETF for the IWM. Let's go see what it is doing out here. On the IWM, that had completed the 1-to-1 A to B equals CD up as well as a butterfly pattern. Let's go ahead and erase those off of the screen out here. Get a better view of what we've got here. Now, the trend line for the IWM is coming off of, again, the same trend line, November 16th low to the low down here on April the 18th. You can see that June 24th stopped that trend. Or the trend line stopped price out. I won't say it stopped price, but that's where price actually stopped out here. If we take a look at where the IWM is headed to, first that May 22nd number is 100.38. The trend line, we'll have to see when it gets down there, but that's going to be right around the same level. Maybe it's, we'll call it the 102 to 103 range as to where, the 100, let's say the 99 to 100 range is where the IWM should head to. It's at 102.38. Making highs out here back on August the 5th with 15 million shares so far today, 11 million shares to the downside. I'd say we might have some volume off of the top. What say you? 877-927-6648. You've got silver up 9 cents, gold down $7. The metals behaving pretty well. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see. The lead in the charge, the downside out here, got MasterCard in on the game. They're off about $11 right now, 1 7/10%. Onyx Pharmaceuticals up $9.30. Google's down $9. Priceline off about $8.50. LinkedIn down $8. BlackRock off $6.45. Regeneron Pharmaceuticals off about $6.50 or so. Amazon down $5. VIP Shop, that's off about $5. Alta Salon off $4.70. Biogen, BIIB off $4.70. To the upside here, looks like you get a medium rare hamburger today at Red Robin Gourmet. They'll be serving the medium rare in honor of the market being down, but they're up $3.87. That is up a nice 6.8%. Let's see what they generated out here. They did total revenue $283 million versus $223. So the Burger Nation surviving well out here. Also the upside, you got Estee Lauder, that's up $3 and change. Integrated Life Sciences, IART, up 7% here this morning. Kohl's Corp up $241. You've got Dillard's up $6.20. That's a nice move in that stock as well. Our call number 877-927-6648. Let's go back to the index charts out here for a moment as we take a look at the SOX index, the Philadelphia Semiconductor Index. It is gapped into the 1-to-1 A to B equals CD. That was at 462.74, so it's completed that pattern. It's going to head lower. You don't complete a D point like that and then start to move higher. That says that it's going to move down into that June 24th level. Inside the stocks, that would be 448 to 458. It's trading at 462.95 right now. Let's go take a look here at the transports. Let's go see what the transports. This is the monthly chart of the transports. It closes this month here below the 61.86 mark. It will have formed a bearish engulfing candle after coming off of the 2009 lows and completing almost exactly a 1-to-1 A to B equals CD up pattern. But that's on the monthly chart. Let's go over, take a look at the daily out here. Daily chart. This thing has pulled back. Let's go take a look at its retracement from June 24th's low all the way up to the high that was put in. Nice bar, by the way, on August the 1st out there. But it is already below the 0.382 level. 62.32 is the next touchy point, the next stop point, but really looks like 61.09, which means it'll test the top of June 24th at 60.95. See what else I have inside this. Oh, of course, what I have inside this that you've got to be paying attention to most certainly today is the VIX index. Why? Because it is up above that blue squiggly line. That's the 50-day exponential moving average. And any time and every time. It's not like occasionally. It's not like sometimes it works. It's like all the time it works. All the carnage that really takes place in the market is when price gets above, when the VIX gets above that 50-day exponential moving average. That number, 1398, right now it is traveling at 1443, and it gapped up through there. So a sign to be extremely careful. You can take this chart back. You can go back as far as you would like, and you can see when price gets above that exponential moving average, that 50-day, I'm going back here to 2008 now, September 4th, 2008, we saw price move above that 50-day moving average, and what we saw was on the bottom of my chart, if you're watching us on Tiger TV, we're watching how price just continued to careen down all the way into the lows, quite frankly. Well, if you take a look at when price actually stalled, was when you saw the VIX get down below the 50-day moving average, which took you all the way back to December of 2008 out here. So be extremely, extremely careful out here. Today is a very important sign. We've had the New York Stock Exchange. That's been giving the signals here for the past 2 weeks that there have been trouble under the there's trouble under the covers, and most certainly that's what we are seeing today. And we're seeing volume to the downside. So you're seeing all of the all the things you don't want to see, which is a move up on light volume and down on heavy volume out there. Says there's trouble in River City. If we go and take a look at that 120-minute chart on the ES Mini, breaking through that consolidation level, still has lower to go out here. That price projection would be 1650. What we've seen thus far is 1657. It's trading at 1661 right now. Of course, it is in the extreme sold condition. So at some point in time here, we're going to see a move sideways. Certainly if you get more than a 10% a one-day rate of change inside the volatility index right now, it's at 10.28%. Look, about the worst thing that could happen is you get a rate of change that's less than 10% and you stay above the 50-day moving average. That says it's not going to let anybody out of the market because you won't even see a bounce here. And the reason I say that is because my studies show that when you have a one-day rate of change we'll call it above 10%. The next day is a market that either stalls, moves sideways, or bounces. That happens 80% of the time. The question is, which David White posed to me, and it was a great question, what happens the other 20% of the time? Well, the other 20% of the time, it bounces or moves sideways on the very next trading session out there. 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 195 right now. S&P is off 22. Bonds really struggling, so they are below the swing point here, the most recent set of swing points. We'll go back. The one that's most important to me is that July 5th level, when you had bonds trade down into that 132.04 level. You are trading below that right now. Bonds certainly not moving higher, so the market money's not coming out of the market going into bonds. That is for sure. Of course, the what has been moving in the markets here, commodity sector, you've had gold, silver really off to the races out here. If we take a look at silver, this morning here it completed the 1 to 1.272, A to B equals C to up. No, nice move here off of that C to D leg. That C to D leg forming here at when it made a 0.618 retracement on August the 7th out there, says that it wants higher price, $22.97. I think inside the metals marketplace, inside Goldilocks, inside silver, we've seen what may end up being historic type lows out there as the market made its lows coming back to June 28th out there. No longer are we seeing any type of correlation between the U.S. dollar index and the metals. Right now, the U.S. dollar index is up 10 pennies, trading out at 81.86 out there. Let's go to Bob in Louisville. Bob, thanks for calling. Thanks for holding. How are you?
Well, I'm fine. Glad you took my call. Hey, listen, I'm asking about the GDX.
Yes.
But I also own the NUGT, the Nugget or whatever.
Oh. Okay.
So the question is, do you think we're at? I just heard you say that it looked like we had hit the C to D on maybe silver.
On silver, yeah, not on gold. Yeah,
Right.
silver's actually leading the charge here to the upside.
Mm-hmm. So what I'm asking is, do you think we're at kind of a peak or a top right now? We're going to consolidate, or just for a day or two, or do you think it's going to be an extended consolidation, or what's your thoughts?
Well, let me ask you this question, Bob. What I mean, you're in the 300% and the 200% ETFs, right?
Right.
Okay. Now, so from a trading plan standpoint, just so I understand when you got into it, what's the time period horizon that you're looking for to be in these positions? Because that makes it a little bit easier for me to help you with that call.
Well, I think of course, the Nugget is especially volatile.
Yes.
And I'm thinking, I've got profits in it. I'm thinking that maybe I should take profits and then wait for a pullback or a consolidation. And then buy back in.
Sure. Well, first, taking profits is a good thing, and there's never, anything wrong with taking profits. So that's a good thing. If we take a look at the GDX specifically first, the swing point that it's dealing with here is July 23rd, and it did 39 million shares at that swing point. And yesterday, it crossed that swing point with conviction. It did it with 53 million shares. So the GDX is saying to us that it actually wants to travel up to $30.08. That would be the one-to-one A to B equals CD. So you do have a confirmed A to B equals CD. It's at 28.37 right now. It's trading just slightly below that B point of July 23rd, but that's not a big deal out there. Another way that you could do it, okay, and this is this is one of Tom's secrets. I think it's one of the best kept secrets out there, and not so secret because he talks about it, but oftentimes, but I don't think we talk about it too much. In your case, you're taking a look at both of these positions, perhaps as you want to get back in. So oftentimes you get out, you've made some money, and now the question is, when do I get back in? Another way to take a look at it would be to go ahead and take all your principal off the table. Just simply have free shares.
Okay.
And, when you have free shares, doesn't matter whether it's 3 or it's 10 or it's 50 or what have you, when you have free shares, that's a beautiful thing, especially when you believe that over the longer haul, you're looking for this to move much higher, because now you've eliminated the risk, you're already still in the trade. So what that does to you, I think what it does for me, is it makes you a little bit more objective as it's pulling back, because you're still in the trade, you got free shares and it goes up, you're in a good situation out there, in essence you've let your profit portion rise, and then you're just waiting for a market to maybe pull back into you. So that's another way to take a look at the trade. Now, if you were going to do that, then what I would do is I would say maybe instead of the GDX or the Nugget, would be start taking a look at some of the individual gold stocks or silver stocks out there that have behaved really well, and set your targets to buy those, because what you really are doing is you're trying to sift through maybe 40 or 50 stocks out there, and try to understand which ones have really had the best response off of the bottom here. And then maybe you're more targeted versus the entire, breadth of how many ever stocks might be inside the GDX. So that's another way to take a look at it. But the GDX did give you a confirmed A to B equals CD up to the 30.09 level. It's not overbought just yet. But remember, you're subject to what's going on inside the actual GDX. What's the weighting structure? And so you're really subject to the performance of each of the stocks that are inside there. And if some of the heavier weightings start performing poorly, the GDX is just simply isn't going to go as fast as the better performing stocks. Does that kind of make another way to think about it for you?
Yeah, it makes a lot of sense. I would just thinking that if we're going to get a small consolidation, in today's action, especially right now, is just a little bit of consolidation, then we're to give the stocks breathing room, and then we're going to go ahead and continue up, like you said, the confirmation on the GDX.
Yeah.
$30.
Well, and very well may be. Now, the GDX and gold, I mean, they go lockstep. So, they do the tango. So, so as I said, the very first thing I said is never, ever is there a bad time to take a profit. This is a game. This is a business about making money. And when you start complaining about making money, that's a bad thing. That's like saying, wait, I've got too many customers coming in. No, that's a good thing.
Absolutely.
So I think you've got to go with your instincts. I always just throw out there the idea, a great idea that Tom has had, especially as equities and things have been coming off of a bottom and continuing to take your bread off the table, meaning your principal, but then having those free shares out there. I mean, that is just consider that at some point in time in the future as part of your.
The more you talk about it, the more it settles into my head. It makes a lot more sense. So.
Yeah, you've got to do something that's right for you. Like I say, we don't talk about it enough, here at TFNN, but it's a great way to be able to build positions over longer. That's why I asked really what your outcome was. So if you do get out, what I would suggest that you do, instead of just focusing in on the GDX and the Nugget, is go take a look and sift through all those gold and silver stocks and maybe take a portion of your next trades and look for those and ride those that have really come off of the bottom strongly. All right, Bob?
I've got the order chart so I can construct some maybe CDs and.
Perfect.
That'll make a lot of sense. Like silver
there are some that have really exploded off of the bottom. And I would also say this. I would say begin focusing on silver. Where silver had been acting weak, silver is strong out here. So I would also say focusing on silver, because it sounds like so far in the trading, it's all been more of the gold-related side. I would say focusing on silver. I think that might be a real big opportunity.
Yeah, that makes a lot of sense, too. Okay. Well, listen, thanks a million. I appreciate it, and we'll talk to you later.
Okay, and thanks for calling. Have a great day. Right now, the Dow's off 208. Let's go back to the intraday charts out here. Let's see what we've got going on because, I'm a big believer in paying attention to these oversold levels out here, and most certainly on the 30-minute chart. I mean, it's down into the extreme levels. And this 30-minute chart that we're looking at out here, we've seen the 1 to 1.618, A to B equals CD. That price projection was 1657.50. So far, the low that we've seen is 1657 even. But we haven't seen any bulls. Now, when markets move down into an oversold condition, it means you're looking for it to do one of two things, work that condition off. And it's going to do it. Doesn't mean it's going to do it right away. It's going to do it when you see some bulls actually show up. There's been no bulls here on this move down since last time we saw any kind of bullish configuration inside the 30-minute chart was last night at 8:30 in the evening. At 8:30 in the evening, you got a nice little bullish engulfing candle out there. And that really was the last time that we saw any kind of bulls in on the ES Mini on the 30-minute chart out here. So you're really looking for that to give you some type of signal that the market is ready to begin moving sideways and work off that condition to potentially bouncing. Either one out there, and we do not see that at this stage. So that always sets up, a move to lower levels. Look, in a bull market, when you get into the overbought condition, it can move higher, it can push in because it's in a bullish market. And this is why it's also really important to be watching these oversold, these oversold or overbought areas, because in a bearish market, oversold, that's normal, natural. Markets are going to push down in, and the bounces on the oversold levels are typically only going to get you up into about the midway point, somewhere around the 50 level. They won't go back up and take a look at that 70-ish level for quite some time. So the ES Mini's got plenty of pressure on it. We want to go back and take a look at the index. We want to take a look at the weak hands out here and see what's going on inside the weak hands. That is the Dow. We took a look at the Dow early on. It was up against coming into the potential support level set up by the trend line, as well as the top of that June 20th session. The top of that June 20th session is 15.105.51. So far, we've seen a move down to 15.107.81. So, in essence, it has touched that area, or very close to touching that area. It's bounced a little bit off there. This is a natural area. So, we're not the only ones watching this same trend line out there. There's all kinds of trading desks that are out there watching it as well. You get a break of this trend line. Remember, this trend line inside the Dow has not been broken since November 16th out there. So far, everybody should be taking a look at this saying, okay, okay, the trend is still in place. And that's an accurate statement. Now, what you got to really be careful of is whether or not there's buying and selling. And that's why, just go over, take a look at the diamond. Just go take a look at the ETF structure. Let's go do that right now. And we take a look at the ETF structure. What we're going to see is you've got big selling off of highs out here. We saw that taking place inside the Dow, a couple of months ago, as we saw big stocks that were gapping down, some creating island reversals and so forth. Today, as we speak right now, in 1 hour and 15 minutes of trading, 3.8 million shares, at 3.8 million shares coming into the last little sign of strength out here, which was with about 5 million shares on July 5th. That's where it's traded into. The top of July 5th is 151.09. The low so far this morning is 151.10 out there. 3.8 million shares coming in there. It's coming in hot, and it's coming in, and it's going to get down and test June 24th out there eventually. That's 14 million shares down there. So we're seeing volume. We're seeing gaps down out here with volume. That is never a good scene. Prices stopping where it should out here. And what I would be looking for is I would be looking to add to any short positions if you've got them, or I would be looking to take new short positions here. But this is not a buying opportunity. We're not seeing a market here where folks buy the dips. I used to get emails from folks every time there was the market would move up. We'd say, hey, it's forming this pattern or that pattern, and all I would hear about would be Uncle Ben, and how can you call for markets that are going to move down or what have you, and those emails usually stop when we get days like today. In fact, I haven't had them for a little while here. Now, of course, we'll probably get a flurry out there. But look, the key things to be paying attention to, in my opinion, the New York Stock Exchange, the wider swath, the wider breadth of the marketplace, that is your best indication as to what's going on. And for 2 weeks, over 2 weeks now, we have seen where the bears have had control of the marketplace. The next best place for you to be paying attention to, forget about me, anybody else, Uncle Ben, or what have you, just pay attention to that VIX index when it gets above the 50-day exponential moving average. That's at the time when you want to make sure that you really have tightened up on your stops out there. Volume-wise, if we go back in now to the 10-minute charts out here, let's go back to the diamonds. Let's see what's happening volume. If we're taking just a little bit of a breather out here, so as we take a look at the diamonds, let me refresh my screen, make sure I've got all the accurate numbers out here. It'll take just a moment to refresh. As we're doing that here, you've got natural gas. That's off to the races here. That's up about 1.5% out there. I gave away a natural gas trade on the air. We'll go back and we'll take a look at that. So far, in the first 10 minutes, we saw 747,000 shares in the diamonds. Then it picked up a bit. 617,000 shares. A little bit of a lull coming into 10 o'clock. That was with 436,000 shares. Selling picked up again, 684. Made a low with 473. It's coming into that low right now with 219,000 shares with 2 minutes to go. So volume dissipating just a bit here inside of the diamonds. We'll go take a look at natural gas. I believe they were out with some inventory numbers or something. But, regardless of the inventory numbers, this thing had all of the patterns that you could want set up here. It did a nice 1 to 2 A to B equals CD down. That's coming off of the high, and it's the natural gas. So for those of you that trade the UNG, make sure you get access to the natural gas contract, because you've got to pay attention to what's going on inside the underlying instrument, and that's what we're taking a look at. The natural gas contract made a high on April 18th out at $4.43. Basically, that was your A point. Your B point was down here at the trading session on May 9th. Your C point was all the way up here on May 28th. A 1 to 2 A to B equals CD. If you get The Art of Timing the Trade, if you get that book, which you should have, that should be in your library. When you do a 1 to 2 A to B equals CD, you're most likely going to do something else. You had natural gas coming into a gap up to a breakaway area. Came back there. You had a key reversal session and bullish engulfing candle on August 8th. It had everything. On that day, when all those were being formed, all those patterns were being formed, I gave it away a trade. And then my clients and I, we actually took that trade. 877-927-6648. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow off about 217 right now. S&P down 24 points out there. And if you haven't had a chance to check out Mastering Probability, now would be a great time to do it. We've got 10 positions on, all 10 nice winners, some of them huge winners out there. In fact, if you total up the percentage increase over our buy points, if you total them all up, we're like at about 85% here right now. So you can test drive that. 30 days, unconditional money back guarantee. All the details on the homepage of TFNN.com. Just click on my name, Steve Rhodes. Now, let's take a look at the markets. Let's take a look at what we do know. I've got the 120-minute chart here on the Dow on my screen. Dow futures below the .382 level. Says we ought to get to 14,904 at some point soon. That could actually happen today. You're at 15,097. That would be, about another 14,915, 15... Where is 15? Another 100 points down or so, so a 300-point day to the downside. That certainly is doable out here. The other things that we know that we've got to be paying attention to on the indexes, again, it's the Dow. We're going to pay attention to the Dow. It's going to, because it's the leader. It's the leader on the way down. It's up against that trend line that it has not broken going back to November 16th, so we want to pay attention to that. It breaks that. That is a big signal. You've got the VIX being above the 50-day exponential moving average. Again, that number here for you to be paying attention to. The 50-day is 13.98. You get a close above that. That is bad news because that's where all the demolition occurs inside the market. If you do get a close up, that's a 1% rate of change above 10%. Right now you're at 10.58. That means percentage from yesterday's close out there. That says that we should see a bounce in the market either tomorrow or on Monday, tomorrow being Friday out here. And that bounce, that does not necessarily have to be a big bounce. It's one that you should be looking at in order to be able to get on the short side. Where would that be? Well, if one of the best ways to pay attention where that might be is take a look at that 120-minute chart on the ES Mini. That's broken a 23-point consolidation range. That has a target of 1650. So far, we've seen a low of 1657. That says now that's a minimum target, by the way. 1647 would be the dead cat bounce on the ES Mini coming off of June 24th side to the August 2nd low out there. So you're trying to get back inside that consolidation would be a price of about 1672. I don't expect we're going to see that today, but in any event, that's what you're looking for. The Bears have got real complete control of the market. Right now, you've got net declining issues somewhere around the 2,500 level. You need a 2,500 net advancing issues in order for the Bulls to take control. That is not going to happen today as well. Let's see, what else do we need to pay attention to in the marketplace? I think that pretty much wraps it up. Doesn't wrap it up for us here at TFNN because we got Basil Chapman. Let's see, it's Thursday. Basil Chapman is up next. I don't know if Larry is back or if Basil is going to be doing a 2-hour stint today, but then following Larry's show is going to be Daryl Martin from 1 to 2, David White 2 to 3. It is Thursdays. That means we've got Andy Heck from 3 to 4, the warm-up band for the Tom O'Brien Show from 4 to 6. So, you should be watching IBM for sure, that being the largest weighting inside the Dow. And the reason we want to watch IBM is because that is moving down into a long-term consolidation. It's the one that Stevie Son has been waiting for what seems like forever. But maybe it breaks that. If it breaks it, that says that IBM will have another 30 points to the downside. It's not there yet, but that price point is right around the 182.30 and change. Right now it's trading out at 185.83. So be great. Be careful out there, folks. Keep your seatbelts fastened and stay tuned. Yes, Basil's going to be up for 2 hours. So have a great Thursday. Look forward to seeing you tomorrow. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.